Good morning. I know I am a few minutes early today, but we are having off and on bad rain in Georgia. And while my internet is acting right, I wanted to go ahead and get this recorded. So if you have to go back and watch the replay, I'll have the replay posted for you all, and it'll also be on my YouTube page. But I really need to get this started today. So, last night, I guess I should introduce myself. For those of you that don't know who I am, I'm Melinda Talbert, also known as the Queen of Taxes. I'm the founder of MJ Tax Relief Group and of the IRS War Room. And this new series that I'm starting, The Indictment, is something that is going to be very interesting. So, and it's going to be a ride. This week, I'm kind of testing out different things. The time that'll be good for me to go on for me and for you all, and the flow of the series. So this week will be a tester, and it'll help me work the kinks out. And y'all can give me some feedback on the series, whether you like it or not. So last night, I asked a question online that sparked a lot of debate, and some of those comments were hilarious. Y'all had me really crying with real tears in my eyes at y'all responses. So the question was, would you do 4 years in federal prison for $145 million? Lots of people had opinions, very funny opinions. I would say 95% of everybody was like, yeah, no brainer. So my answer was okay. So um I'm logical. So I have to sit down and I have to think, okay, so what happens if this dude's like, I play devil's advocate. I have to get my husband's input. I have to calculate my numbers. And of course I have to think about my kids. So my answer was, yeah, like I'm 44 years old and I still ain't made $145 million in 44 years. So 4 years, 4 years, I can make $145 million. Even if I don't survive those 4 years, I'm still thinking about my kids. Like my kids will be straight. If I were if my mother had an option to get $145 million if all she had to do was do 4 years in prison, and she chose not to because she was scared that she would miss an event or a moment or anything with me. Girl, I would be so mad with her. Like, girl, if you don't go do them 4 years, if you don't go and do them 4 years, like that's sacrifice. I know I see who would not have walked with Dr. Martin Luther King because y'all ain't about that sacrifice life I see. But my answer was, hell yeah, I do 4 years, and I'm probably the scariest of the scariest to go to jail. I'm afraid to do 1 day in jail, but for $145 million in jail, it depends. It depends. That's my answer. It depends. So the reason why I asked that question is in this new series that I'm gonna start discussing with you all every week. The series is called The Indictment. In this series, I'm going to break down and discuss an indictment with you all every week in the tax world, in the tax industry. Today, we are going to break down the real case behind that question because this person, they didn't make $145 million. But when you saw, if you would have seen the headline, 145 million, it's 100. He calls the IRS 145 million in tax loss. So let's be clear about that. If you've been following me for a while, you know I normally go live talking about IRS audits and tax investigations, the work that I do at MJ Tax Relief Group, and what we do inside the IRS War Room, helping businesses survive. Starting today, I want to add something new to that conversation, and something that most people never see until it's too late. Because every year in America, you have tax repairs, you got business owners, and you have some very wealthy individuals that think they have figured it out. They've cracked the code. They learned how to beat the IRS. So what they do is they inflate deduction. They create shell businesses, fake businesses, and they manipulate refunds. And for a while, for some people, like a lot of people got their PPP loan, it works for a while. And some people even get away with it. A small percentage of people, they do get away with it until the IRS stops auditing and they start building a criminal case. Your bank records get subpoenaed. The investigators start interviewing your tax clients. Yes, the government will interview your tax clients. So think about your reputation when that starts happening. When the word gets out, the IRS call me or the Department of Justice call me asking me questions about my tax preparer. That's something that you will have to deal with if you are a tax preparer. So the investigators start interviewing your clients, and the federal prosecutors get involved. And eventually, someone gets indicted. So starting today, I am launching the new series called The Indictment of the Week. And this week, we're going to talk about what happened with this 145 million tax loss. We're going to break down real federal tax crime cases every week. We're going to talk about the schemes, the investigations, and what happens when people are indicted. People that believe that they're smarter than the IRS. Like this, I play a lot of games, but them alphabet boys, I'm not playing no games with none of the alphabet boys at all. Some of these cases that I'm going to be discussing, most of them involve millions of dollars. Some involve tax preparers that have filed hundreds of fraudulent tax returns. And some started with something as simple as a fake deduction. And that fake deduction spiraled into a federal indictment. And so people, they add little fake items on the tax return and they think that it's not a big deal, but it really is a big deal. It can be a small fake deduction, and you'll see in a minute what I'm talking about. The case, the indictment of the week this week is actually one of the biggest tax preparer fraud schemes that investigators have seen. I actually was in a conference with the actual investigators that worked this case. So it was very interesting to get insight on this case. According to those federal prosecutors, a tax preparer filed thousands of fraudulent tax returns. So this man, I'm going to share his information in a minute. He filed thousands of fraudulent tax returns. When the investigators finally calculated the damage that he caused, the scheme had caused more than 145 million in tax loss. So let's talk about how this happened. The Bronx tax preparer, he is also known as the tax magician. And let me get my notes to make sure I don't miss anything. He's also known as the tax magician. According to federal prosecutors, he orchestrated a decade-long fraud scheme that cost the IRS 145 million in loss. But here's the twist with this case. When I started researching this case, I was like, does he have a trial coming up when he was already sentenced? We'll talk about that in a minute too. But even after being sentenced in prison, his legal problems are not over. I discovered that he also has an active case in the U.S. tax court, and he has another upcoming trial date. So today we're going to break down the indictment. We're going to talk about how the scheme worked, how the IRS uncovered it, and why his case is still being litigated in tax court. So his name is Rafael Alvarez, and anything that I share it because it's public records. You can go out and you can look at it yourself. If I ever get my hands on some information that's not public records, I will not share it. And if I share any documents online that's not public records, it'll be redacted. So his nickname is the Tax Magician. His business was A Tax New York. It was in the Bronx in New York. That was the name of his tax preparation company. His charges, surprisingly, his only charges were conspiracy to defraud the United States and aiding and assisting in the preparation of false tax returns. I'm like, so you mean to tell me out of $145 million, this man only got 2 charges? Okay, make it make sense. So the timeline was from 2010 to 2020. So this was a whole decade fraud scheme. He pleaded guilty in 2024. And last year in 2025, he was sentenced. We'll talk about the sentencing at the end after I give you all the details. So as you can see, this was not a small operation. His company prepared, listen to this, y'all. This man's company prepared 90,000 tax returns during this scheme. 90,000, not 90,000, 90,000 tax returns. According to the prosecutors, the business filed tens of thousands of tax returns containing false information. And the fraud techniques were, this is how it unfolded. Let me make sure I don't miss anything. Okay, the fraud techniques that he used was something that some tax preparers use, and they don't think it's a big deal, but it really is a big deal because you can land in prison. His fraud techniques were he had bogus itemized deductions on most of his tax returns. He fabricated capital losses on most of his tax returns. He had fake business expenses, fraudulent tax credits. And the reason why he did all of this was so he can reduce his clients' tax liabilities. So if some of his clients, let's say that they owed $10,000, he would add all kind of bogus deductions and fake credits and add fake businesses so they would not owe that $10,000. He also had low income taxpayers as clients, and he would give them fake credits and deductions to generate a large refund. So taxpayers, when you see people advertise, I can get you 10,000, I can get you 20,000, the first thing you should want to know is how. Second thing, no. First thing you need to ask is this legal? Because 9 times out of 10 it's not. Second question you should ask is how. Because at the end of the day, regardless of what a tax preparer put on your tax return, you are ultimately responsible for it all. So the magician, the clients named him, they gave him a nickname, the Tax Magician, because he allegedly could make tax bills disappear. Listen to this, y'all. Let me tell y'all what the prosecutor said. They so petty. And this was a very funny story. So the prosecutor said that the magician was actually systematic fraud. When Alvarez was charged, what day was he charged? He was charged on April 15th. It was the tax day. What a coincidence. The IRS special agent in charge, Thomas, he said that while Alvarez was known as the magician, he can't say abracadabra and make these charges disappear. And that his arrest was no magical illusion. When I read that, I was like, oh my goodness, now he being petty now. So he also recruited and trained his employees to prepare taxes the same way he prepared taxes. And when the employees questioned the practices and how he were training them to do taxes, the prosecutor said that he would intimidate them into silence. So although they knew what they were doing were wrong and they brought it to his attention, he intimidated them and made them shut the hell up and not tell what happened, what they were doing. So some of the unusual red flags, some of the usual red flags that will cause the IRS to take a closer look and start investigating is if all of your tax returns that you prepare have unusually high refunds. Now, I'm not saying that some tax businesses, they probably specialize in low income tax payers preparing their tax returns. And most of those low income taxpayers with a job and a few kids, a job that don't pay much, they probably will get high refunds. But that's a red flag. Not saying that you doing something wrong, but it is a red flag. Another red flag was all of his clients, majority of the clients had the same deduction. How does every last one of your clients or 95% of your clients, do they all have the same deductions and credits? That's another red flag. Another red flag is suspicious prepared activity. We'll talk about that one in a minute. So once the patterns appear, the case can be referred to the IRS criminal investigation for them to look into it and start investigating to see if it's something worth pursuing or not. And obviously, this was worth pursuing. So the agencies that were involved in this case, it wasn't just the IRS criminal investigation. You had the FBI involved, the Treasury Inspector General for the tax administration. That's the TICTA. And an important fact that I want you all to know if you're not aware is the IRS conviction rate is 90% in federal prosecutions. So if they take you to trial, then they probably know they got you. They got more than enough evidence for conviction. So his sentence, here's the kicker. 145 million tax loss is what he caused. This man was only sentenced 4 years in federal prison. And that's why I asked that question. Would you do 4 years in federal prison for $145 million? He didn't make 145 million. That was the tax loss that he caused the Internal Revenue Service. So he was sentenced 4 years in federal prison, 3 years supervised released, and of course, he had to pay back 145 million in restitution. And so that's what people don't realize either. When you are out here doing these fraudulent activities, yeah, you might be making money and you're able to splurge and you're able to go where you want to go and buy what you want to buy and do what you want to do. You're multimillionaires, but at the end of the day, it's not worth it. Especially if you are doing this type of fraud, it's not worth it because when you're caught, you got to pay all that shit back. So you're going to be working for the government for the rest of your life until you die. This man got to pay back $145 million in restitution. And he didn't even make that much. Also, as part of his guilty plea, he has, I just told you about the 3 year supervised release, and he had to forfeit over $11.8 million in fraudulent proceeds. So that's about how much he profited off of the 145 million tax loss. So he got to pay 145 million in restitution, and he had to forfeit over $11.8 million. You see why fraud is not worth it, and you see why you won't ever see a headline that MJ Tax Relief Group or MJ or Melinda Talbert ever committed fraud when it came to taxes. Any kind of fraud, not just taxes. It's not worth it. At the end of the day, it is not worth it. So earlier, I shared with you that he also has a U.S. tax court case that's still pending. Let's talk about that tax court case that's still pending. So even though Alvarez had already been sentenced in federal court, he also has an active pending case in the U.S. tax court. That case is currently on the docket for a trial session in June, and I'm actually gonna try to make that trial. So that, though, I shared that with you because that highlights something that many taxpayers or even tax prepayers don't realize. Criminal cases and tax court cases are two completely different legal proceedings. Did you all know that the IRS criminal investigation, their special agents are the only federal law enforcement agents with investigative jurisdiction over violations of the IRS. I didn't learn that until I started getting real deep into tax law years and years ago. So the IRS criminal investigation, also the IRS CI, they are the criminal investigative arm of the IRS. They're the ones that's responsible for financial crime investigations, including tax fraud, narcotics trafficking, money laundering, any type of public corruption, healthcare fraud, identity theft. All of that is done by the Internal Revenue Service, CI. So if you didn't know that, now you know. The criminal court punishes the crime, but the tax court determines the civil tax liability and also the penalties. So that's what he is awaiting trial for in the tax court, for his civil tax liabilities and the penalties. So even after someone goes to prison, the IRS can still pursue civil tax issues in tax court. So don't think because you got your little sentence with for a criminal that you are in the clear. No, baby, they will come back and take your behind to the United States tax court trial. So when the IRS investigates a tax preparer, you all need to know this, tax preparers. You need to know that they don't just investigate the tax preparer. When they investigate you, they often review your clients' returns too. So your clients, just because you're under investigation, your clients might face an audit, and it could be a return that you did correct. Whether you did the return correct or not, they can audit your clients' returns. They can issue penalties, and they can add additional tax assessments to your clients' files. So even if, and this is what I kind of don't like, even if the client didn't know the return was fraudulent, they can still be audited and they can still be penalized and they can still receive additional tax assessments. I don't think that's right. Do you all think that's right? Let me look at my comments. Do you think it's fair that clients, innocent clients, because, and this is why they're innocent. And I'm not talking about the people that agreed to do this fraudulent activity so they can get more money or so they won't have to pay the Internal Revenue Service. You have innocent clients that honestly were not aware of the fraud that were on the tax return. And I know some people probably wonder, well, how is that possible? Let me give you an example. You have fraudulent tax preparers, and some of them are ghost tax preparers. They will file and they will prepare a tax return. They'll get the client to sign a tax return, and this client probably aren't expecting anything but $100 in the mail. I mean, a $100 refund. After the client leaves, the tax preparer goes back into that tax return and they add all types of fraudulent credit and deductions that boost that client's refund. And let's say that this client that think that they're only getting $100, now they are getting $10,000. The client never knows about it until the Internal Revenue Service audits them. They audit them and they get a letter in the mail saying you owe $10,000. We paid you $10,000. You were audited. You didn't show proof that you were eligible for these credits and deductions. So we need you to pay this money back. And they have to pay it back. They're going to have to go hire an attorney to fight it. That is something that I will wholeheartedly do. If I was that tax payer and I was not aware of this fraud, I would hire an attorney and I will fight it. Otherwise, you're going to have to pay it back. I have cases right now from fraudulent tax preparers that added fuel tax credits and other bogus credits to taxpayers' tax returns. And these people were not aware of any of this until they received calls from the Internal Revenue Service. They had to interview with the Department of Justice, and they found out the hard way that somebody or the person who did their tax return received all this money from them, and they directed it into their bank account. And when I say there, I'm talking about the tax preparer. So yes, that can happen. It's not right, but it can happen. So this was our first indictment of the week. Like I said, this week I'm kind of working out all of the kinks to see how I want to do the weekly shows. I do know that every week I will present a new indictment and we'll break down the case. So for this, this was this first week indictment. On Wednesday of this week, I am going to actually break down how the Internal Revenue Service detect fraud patterns like this. And on Friday, we'll stick with the same case. We're going to talk about what happens to taxpayers when their preparer gets indicted. That's going to be interesting and informative as well. And let me make sure that was all the information I wanted to share. Yeah, that's all the information that I wanted to share about this case. Like I said, this case was not the U.S. Tax court case. Those are the cases that I'm going to mostly be discussing. This one caught me off guard because I wasn't aware that they had two cases until after I got deep into the research. If you are a tax preparer, this is the type of cases that we analyze and that I teach you how to work inside the IRS war room. Professionals need to know how these schemes work. If you're a tax preparer, you need to know how these schemes work. You need to know how the IRS uncovers them. And you also need to know how investigations can turn criminal. And that's what we're discussing. And that's what I'm training you all to learn in the IRS war room. Now, the war room applications closes this Thursday. This is it. VIP is sold out. So if you still want to be in the room, you won't be VIP. I'm honestly trying to work something out to see if we could get more VIPs added. So far, I can't figure out a way to get more VIPs. But listen, y'all, if you know me, you know where there's will, there's way. So you have to submit an application. This isn't you pay and you're in. No, you have to actually submit an application. You have until Thursday at noon to submit those applications. If you are selected, you have to attend a mandatory briefing. Our last briefing is this Friday at 11 a.m. And I don't have the link right now, but after the live is over, I'll drop the links for those of you that's interested in attending the IRS War Room. Tomorrow, we are going to discuss 10 signs that your tax preparer, or you, if you're a tax preparer, 10 signs that your tax preparer may be committing fraud on your tax return. Because you all need to know that. Because like I said earlier, at the end of the day, the Internal Revenue Service is going to hold you accountable for everything that's added on your tax return. Even if you wasn't aware that it was added on your tax return, you got to show proof that you weren't aware. So that's what we're going to talk about tomorrow. And I hope you all enjoyed today's live. I went over by 8 minutes. I'm only supposed to be on here for 20 minutes. That's another kink that I'm going to work out. I got to get my timing right. So let me know if you all enjoyed today's. Let me look at my comments. Hey, Carmen. Hey, Rashonda. They said that, oh, so y'all were answering. Yeah. Unfortunately, it's not fair, but they got to prove that they wasn't aware of the fraud, because a lot of people say that they're not aware, but they really are aware. Y'all know how these taxpayers throw these tax preparers under the bus. Listen, they tell them, hey, I can do this, and this on your tax return. But if you audit it, you got to pay it back. Even when tax preparers do fraud shit like that and they tell the client, they don't care. They don't care about no audit. They just want that fast money. But when they are really audited, they're going to throw the tax preparer under the bus. I ain't know they put that on my return. I ain't even got no business. Listen, I hear and see it all. And some tax preparers shouldn't be allowed to touch your return with a 10-foot pole, because a lot of them don't know what they're doing. They are just adding numbers on tax returns. And that is not how you're supposed to run a business. and they are messing it up for the honest people in the tax industry. So the IRS need to hurry up and regulate tax preparation. Kamika. Hey, Kamika. Hey, Karen. Hi, Tanya. Yes. Okay. So you all enjoyed this. I enjoy discussing things like this. So I'm going to do it once a week. Like I said, I'm going to come on every morning at 9. If for whatever reason I'm traveling that week, I'll have to pre-record it the night before and post it. But I'll still answer you all questions and comments when I return. Okay, you all have an amazing afternoon. I am going to head home, so I won't be stuck in this bad weather if it turns to tornadoes or whatever kind of watches we got. So you all stay safe if you're in Georgia, Mississippi, or if you're anywhere where all this bad weather is going on. That stay safe and dry. Don't forget to be kind to people because you don't know what people are going through. And I will see you all tomorrow. Peace.